Okay, friends, we're going to jump straight into today's property update video. So more than 300 residential mortgage products have been withdrawn from the market in the last 24 hours. Now, you've probably seen my recent videos around this, but things are looking a little bit crazy at the minute. So we've had 321 residential mortgage products which have been withdrawn from the market in the last 24 hours, according to Money Facts. And a total of 40% of products have now been taken off the market since the Chancellor's mini budget on Friday, the financial information company found. So in just 6 days, we've seen just over 1,600 products withdrawn, leaving 234 on sale. Now, this is obviously concerning. I'm reading the quote from here about the mortgage market right now. A lot of pressure on lenders and a lot of lenders withdrawing. Now, I released a video on this and I had some mortgage brokers crying saying I'm scaremongering, and I've had some mortgage brokers saying thank you for sharing the facts. It's all over the place at the minute. So just those conflicting messages alone show you that nobody's really 100% certain about what is going on or what's going to happen. Next up, we have banks are preparing for house prices to fall by a third. Now, I've seen some crazy articles about property prices falling by up to 40%, but here it says that house prices could fall by a third as interest rates are soaring to 6% and inflation is moving towards 17%. I did release a video the other day that interest rates could get to 6% by spring next year, or maybe even sooner, as mentioned by the Bank of England. And this is really interesting stuff, my friends. So the Bank of England has confirmed that this year's scenario would include UK GDP falling by 5% over 12 months, inflation hitting the peak of 17% before falling to 11% over the next 3 years, house prices then plunging 31%, UK unemployment more than doubling to a peak of 8.5%, and UK interest rates peaking to that 6% mark. So again, worrying stuff if you ask me. And just to end this article here, we do know that it's just under 2 million people are coming towards the end of their fixed rates in 2023. So again, those people are unfortunately going to be hit with higher payments. Now, Zoopla warns soaring rates will hit affordability. Average UK property values rose by 8.2% in the 12 months to August 2022. And the property portal says that typical UK homes will now cost £258,100 compared to £256,900 in July. And then just moving on, as I don't want to repeat what I've mentioned in other videos, obviously we know about the stamp duty that was introduced on the mini budget. Matthew Thompson, I think this is important just to have a look at, who is a London-based estate agent, says that as interest rates are increasing and lenders are adjusting their affordability calculations, buyers who have not yet found a property may be facing a change in what they can afford. And as a result, many house hunters may be required to review their initial budgets with rising utility costs, which is obviously another important factor to account for. And then we've got many more articles touching on the 2 million homeowners. I think it's around 1.8, 1.9, my friends, who will be hit with higher mortgage costs. And then something that many of you may not actually like is that London may be hit the hardest. And again, there's a lot of conflicting perspectives from you guys, that some people believe there's not going to be a housing market crash, others believe there will be a housing market crash, and some believe that London will be hit the hardest, as Melissa states here, and some just believe prices won't fall in London. So guys, let me know in the comments what you guys think about that. But if we just touch on this, soaring interest rates could cause a mortgage crisis. And obviously, as we're expecting 6% next year, HSBC has also recently forecasted a 15% house price fall in London. And one analysis states that very high prices relative to local incomes mean that the impact of rising mortgage rates on affordability will be more severe in London than anywhere else. And I think that's quite sensible if you ask me. So friends, what do you think? Are we about to see a property crash next year, or are we going to see flatline or maybe some sort of correction? Let me know in the comments down below. Thanks for watching.